I think what's so notable about the NASDAQ is the very simple statement that the leaders are still very much the leaders. Those were the type of stocks before all of this that were very much in vogue, and they remain in vogue right now. So I think that's a really big difference from prior bear markets and prior recession, where you tend to see these big leadership changes. There's not a lot of evidence of that right here, and I think it frankly supports the idea that under the surface, the market is stronger than people suspect. Now, I know, again, the difficulty in reconciling that with the economic data, but you go back and you look historically, the market always bottoms before the cure of the crisis is known. In this case, it's actually a cure we're searching for, but it's probably no different than the prior crisis events that we've all been through.
Yeah, I mean, the idea the market is always looking forward. It sees perhaps better times ahead. It is pricing in 6 and 9 months from now. But when we look inside, let's open up that hood and put our head in the engine, Chris. Are you worried about just this continued sort of it's not entirely, but semi-narrow focus on the relative outperformance of technology?
Yeah, I think the story that this has been a very, very concentrated or narrow advance is a little bit misleading. And by that I say, just look at the performance of small caps or the performance of the energy sector. They've actually outperformed. So while tech has certainly been a standout, there are other parts of the market that are working. Small caps, for example, over the last 2.5 weeks, the small cap, large cap outperformance is among the highest we've seen in history. If you look last week, you had something like 70% of small cap stocks make a 1-month high. Those are the momentum signals that we actually like to see very early in this bottoming process. Now, I think the trouble is you've had a 35% S&P rally over the better part of the last 5 or 6 weeks. Could you consolidate into a weaker seasonal period in May and June? Absolutely. But I think the trick is here not getting too negative, even when the really terrible economic data keeps coming out.
Oil story, that continues to be a part of it as well. And obviously, we're not negative. I mean, on oil, that was a heck of a 2 weeks ago. But oil has firmed up just a bit. And with that, like you, Chris, I look at not just the stocks, but the debts of some of these companies, because debt really is ultimately the oil story. Energy credit has firmed up. Debt, I'm not saying it's perfect, but it's gotten better. How much does that play a part, if at all?
Yeah, that's a great question. I think better is certainly a relative term when it comes to that sector. But, what's important to me is, and one of the reasons this business is so remarkable, go back 3 weeks ago when front month crude went negative. What was so remarkable is no energy stocks made a 52-week low that week, and energy CDS actually contracted. So whatever the crude market was telling you 2 or 3 weeks ago, the stock's already priced in. Mm-hmm. And I think their response over the last 3 or 4 weeks, particularly since the low, energy is actually the best performing sector since the low. I don't think many people realize that, suggests maybe the worst in that group has passed.
So on a macro level, let's wrap it up with this. Just give us some advice, Chris. Obviously, it's May 8th. We had the markets obviously doing well. Then they completely crashed. For those viewers out there that they held on, they held their nose and held their stocks. They've come back. If they own the macro market, do they take profit now or ride it out and expect even higher days ahead?
I think you stay the course. This is not going to be a straight line, but all the conditions we look for at major market lows have presented themselves over the last 5 or 6 weeks. And I think the viewer has to fight the temptation to fall for the hook. And we describe the hook as the one thing every crisis that tries to convince investors it's different this time. But you know what? It's rarely different this time. And I want to keep that in mind as we navigate this market.